Hello and good afternoon to you. I'm Rachel reporting to you live from Kalkine Studios. It's lunchtime here in Sydney and you know what that means. It's time for the mid-market pulse. In this show, we'll take a look at the overall Australian share market performance by midday trading. We'll also explore the biggest winners and losers of the day before focusing on stocks that have grabbed headlines today in our final segment. Australian shares are trading lower in the afternoon as caution prevailed in the market ahead of the second quarter gross domestic product data slated to be released later today. The weak cues from Wall Street as well as persistent concerns over COVID-19 also kept investors sidelined. The ASX 200 is trading 0.84% lower by lunchtime. Earlier today, the index opened lower. Australia's gross domestic product rose 0.7% in the June quarter. This was lower than 1.9% in the March quarter, but topped analysts' forecast of 0.5%. Also, a surge in new COVID-19 variants in Sydney and in several other states is threatening an economic recovery in coming quarters as well. The equity market witnessed broad-based sell-off as 10 of 11 sectors were bleeding in the red. The healthcare sector was the worst performer with a 1.4% loss, followed by consumer staples, which dropped 1.3% by lunchtime. Among others, consumer discretionary, industrials, materials, financials, utilities and tech also witnessed a surge in selling. Bucking the trend, the energy sector was the only gainer, trading 0.3% higher, despite a fall in crude oil prices. The price of the benchmark Brent crude oil fell 0.6% to $73 a barrel. The US oil improved 1% to $68.53 a barrel. On the COVID-19 front, New South Wales recorded 1,160 new local cases and 4 deaths. Meanwhile, New Zealand has recorded 75 new locally acquired cases, of which 74 were reported in Auckland and the other one in Wellington. Let's now turn our attention to the biggest gainers and losers in the mid-market session. The worst performer on the benchmark index was Australian natural health company Blackmores. Their shares dropped 5.9% so far. Some of the other notable losers were Reliance Worldwide Corp, industrial firm Reece, healthcare firm Pro Medicus and biopharma major Mesoblast. On the winning side, aerial mapping firm Nearmap topped the gainers chart by rising 2.75%. Some of the other gainers were education firm G8 Education, travel retail outlet Flight Centre Travel Group, gaming company Sky City Entertainment and gold miners Silver Lake Resources. On this note, let's shift our focus to shares that grabbed the headlines today. First up, shares of biotech firm Mesoblast extended their losing streak for the second day after falling 15% in the previous session. The company reported yesterday a net loss of $98.8 million in the 2021 financial year, while sales revenue dropped by 77% year on year. Next, shares of Volt Resources fell over 3%, even after the graphite producer and battery anode material developer successfully raised $5.75 million via a share placement. The original target was to raise $4 million, but strong demand from the existing shareholders, as well as new sophisticated investors, funds and institutions promoted the company to raise the limit of the final capital amount. The fundraise will be used to commercialise the development of battery anodes and other downstream graphite products in Europe and the United States. Part of the fund will be utilised to drive the Sellovensky graphite business in the Ukraine and complete lithium-ion battery cycling test work on the Bunyu graphite in Tanzania. Well, now it's time for a very short break. Stay tuned with Kalkine TV.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Hello Hello and welcome back. I'm Rachel and you're watching the Mid-Market Pulse. Let us look at some more trending updates. Shares of medical data and technology firm heramed gained almost 3% after securing a new contract. The company has been shortlisted by the Catalonian government's qualification process for technologies in obstetrics. As part of the contract, the company will provide a comprehensive technology solution for departments across 9 hospitals in Catalonia in Spain, led by Hospital Hispania. The tender is part of a government-led effort to adopt cutting-edge technology, allowing personalised better care leveraging remote monitoring and telehealth. Next, shares of dual-listed gold miner OceanaGold slipped almost 2%. That's after they reported resumed operations at the Macraes and Waihi mines after the New Zealand government eased COVID-19 restrictions for all regions, except Auckland and Northland. The operations were suspended on August the 16th. That's after the government's directive to implement a countrywide COVID-19 alert level 4 lockdown. Gold production by New Zealand operations will drop between 4,000 ounces to 5,000 ounces this year due to the 2-week-long lockdown, along with other strict public health norms. Moving on, supermarkets business, Metcash shares traded 0.4% lower after they issued a trading update. The company's sales dropped by 1.8% for the 16 weeks ending August the 15th, as against the same period in the last fiscal. Total food sales also fell by 7.4% compared to the prior corresponding period. However, liquor sales surged 9.5% during the period under review. Next, shares of cannabis-based pharma company Althea rallied over 8% after signing a $3.24 million deal with the Boston Beer Company. The Australian-based company says its subsidiary Peak Processing Solutions has entered into binding agreements with BBCCC as subsidiary of the Boston Beer Company and WeedMDRX, a subsidiary of Entourage Health, to introduce a new range of cannabis-infused beverages to Canadian consumers. The parties have struck the exclusive agreements under a project covering product development, manufacturing and supply of BBC-branded non-alcoholic cannabis-infused drinks in Canada. Next up, shares of EBOS traded marginally higher after they completed the acquisition of Sentry Medical. The acquisition is supposed to strengthen its presence in distributing medical consumables to the institutional healthcare market, a growing business for EBOS. This was their 4th acquisition in the last 12 months, indicating the company's continuation of its strategy of investing for growth. EBOS is a diversified Australasian marketer, wholesaler and distributor of healthcare and medical and pharmaceutical products. Next, lithium-focused Piedmont Lithium has completed a 9.9% investment in Iron Ridge Resources after a share subscription agreement was signed in July. Following the announcement, the share price of the company dropped over 1%. The company has entered into an earning agreement via staged investment in Iron Ridge Resources, a Ghana lithium project, to acquire a 50% stake. It believes the investment will maximise its lithium potential in Ghana and help it become the leading lithium producer in North America. And lastly, shares of Silk Laser Australia climbed almost 3% after they completed the acquisition of Australian Skin Clinics and the Cosmetic Clinic in New Zealand. The acquisition of ASC Group featured an upfront cash consideration of $47 million and an additional $5 million earnout in scrip. After the acquisition, Silk's current network of 63 clinics will get another 55 clinics. This brings Silk closer to achieving the company's network plan of 150 clinics in the medium term. That's all from me for now. Stay tuned to Kalkine TV for more market updates. I'm Rachel, signing off for now.